Hello, I'm Dominic Hobson, co-founder. My guest today is Farah Jaafar, Chief Executive of the Labuan International Business and Financial Centre, the IBFC, the midshore financial centre in eastern Malaysia, which is now attracting the interest of cryptocurrency and tokenization entrepreneurs to sit alongside the insurers, the wealth managers, and the fund companies that have come to Labuan since it started 30 years ago. Farah, thanks for joining us.
Pleasure to be here, Dominic. Thank you.
Now, as I just said, the IBFC is 30 years old. How does the outcome, as you look around you today, compare with the initial plan that was set back in 1990, particularly in terms of the type of business?
Yeah, it's been an interesting ride in the last 30 years, not just for Labuan, but for all international financial centers, really, with the changes in taxation and around the world globally. I mean, it's a complete mindset change vis-a-vis taxation. Now, specifically with regards to Labuan, I think we started 30 years ago with the thinking that we would be the conduit for Malaysian companies looking to regionalize and globalize. Really, that was the key. And so our growth has been extremely organic in the sense that we have catered to our domestic market more so in the beginning. And over the years, because of our reputation and the need for wholesale financial intermediation in the region, we've grown towards the regional, having a bigger regional presence, as it were, and regional, if not global, recognition.
You just said that the plan initially was to help domestic companies regionalize what they were doing. What is the exact legal and regulatory status of the IBFC within Malaysia as a whole?
So if you look at Labuan, if you look at Malaysia with one country, two systems, that's the best way of understanding it. So you have the domestic system, which is under the Central Bank of Malaysia, run by Central Bank of Malaysia alongside the Malaysian SEC. And then you have Labuan. Labuan ranks pari passu as a statutory body under the Ministry of Finance of Malaysia. And our focus is very much international, anything non-ringgit denominated generally.
Now, you mentioned also the international business you've started to attract. And Asia has, of course, become the workshop of the world. You've got these massive volumes of physical trade taking place not just within the region, but actually with the rest of the world as well. And what part does the IBFC or a financial center like the IBFC, what part can you play in facilitating that massive and fast-growing physical trade?
Well, I think that there needs to be a deeper understanding with regards to the roles of IFCs. Generally, I think historically we've been known as these far-flung places that have no substance, rules are somewhat shady. I think that's very unfortunate, really, because what we are is really an intermediation center. So if you look at an IFC as the global plumbing of trade, there's no question as to what role we play with regards to regionalization, globalization, and physical trade. I think if you understand it the way I explain it to my son who's 10, so when we're in Malaysia, we go to a teller machine, hole in the wall, and some ringgit comes out. I use the same card and I go back to the UK and pounds come out. How does that work? It's global plumbing. It goes through financial systems jurisdictionally first, netted off, and then it goes into a wholesale system that nets off globally and then arrives wherever it needs to. So our role as IFCs, not just Labuan, but our role as IFCs globally is to facilitate that. And globalization will not be where we are today, and the world would not be where we are today if not for the function of IFCs.
Mm-hmm. I'd half expected you to start talking about trade finance and commodity trading as well, but are those activities you're looking to attract? Trade finance, commodity trading?
Yes, but I'll be completely honest with you in the sense that our banks, so we're home to about 60 odd banks in Labuan, which is a lot, which is more than I think some of the jurisdictions in the Channel Islands. But the reason that is because they're booking centers for loans. And so a lot of these banks do not have the appetite for trade financing necessarily. which is unfortunate. What we're trying to do is encourage it, obviously. Trade financing, commodity financing, we're trying to encourage that. But you'll find that Singapore still leads the way there.
Now, you talked about the unfortunate reputation that IFCs have as far-flung places with shady rules and ways of minimizing your tax bill, but yeah, you have to differentiate yourself. There are, I think, 100 odd financial centers in the world. Yeah, how would you differentiate yourselves from the other 99?
It's quite simple, really, in the sense that we're part of a larger country. You'll find that a lot of these centers rely very heavily, their GDP relies very heavily on the business of IFCing, as it were. For Labuan, that's not so much the case. I think if, you know, I wasn't there 30 years ago when they set it up, obviously, so I'm supposing based on the information that I have. The idea was really to facilitate Malaysian companies going out, as I said earlier, number one. But number two is really to grow the island as well. So, you know, how we differentiate ourselves is that we are a midshore center, in the sense that our rules are flexible, we're proportionate, but yet at the same time, we adhere to the global standards with regards to regulation, supervision, anti-money laundering, terrorism financing. You have to remember one thing. Labuan is part of Malaysia, and Malaysia is assessed by all multilateral organizations, and Labuan is assessed along with Malaysia. There is a natural check and balance that applies onto Labuan by the Malaysian MOF. You know, Labuan is never ever going to be the Achilles heel of our peer review. So that allows a very safe environment for real businesses that need wholesale intermediation. And that is how we have distinguished ourselves. And to be honest with you, this push in global tax transparency has helped us, because there's been a flight to quality by the users of these centers. So we benefited tremendously.
On that tax point, are there tax advantages, and by which I mean corporation tax or turnover tax, capital taxes, whatever, are there tax advantages to being based in the IBFC?
Yeah, so our tax is 3%. Or zero for certain investment-linked holdings. So pure passive investment attracts no tax. Trading and all the rest of it attracts 3%. There's no stamp duty, there's no dividend tax. So it's a very, very physically neutral environment. However, we are extremely careful with the kind of business we allow in, number one. Number two, there is, of course, now a requirement for substance. So it's no longer, and you'll find IFCs are no longer just mere pass-through jurisdictions. We require boots on the ground, physical presence. There is actually, and we are actually the only jurisdiction in the world, as far as I know, which has, the Malaysian Parliament has gazetted an order dictating for every single license and entity in Labuan the kind of substance requirements that's required in order to enjoy the 3% tax skin.
Right. Now, something else you need in financial centers is professional advisors, by which I mean accountants and lawyers and actuaries and so on. Is it easy to attract those? Are you able to attract them, and how appreciated are they when they get there?
There are tax accountants and lawyers in Labuan, but you'll find that a lot of the advice that's given is actually given out of Singapore, Hong Kong, Malaysia, onshore, right? But what happens is there are company secretaries, what we call TCSPs, Trust and Corporate Service Providers, that are sat in Labuan that then offer their services together with auditors and all the rest of it. Yeah.
I think I'm right to say that the Labuan legal framework is English common law, just like Singapore. And you've mentioned Singapore more than once. How does your relationship with Singapore work? Are they a competitor, a complementary service, a kind of part of a cluster of economies that attract business? How does it work, that relationship?
Yeah, so just going back to the fact that we Malaysia, as part of the Commonwealth, has a common law system. Having said that, however, when you utilize a structure in Labuan, you're able to choose the laws that govern you, or whether it be ADR, in fact. So we allow for alternative dispute resolution, common law, civil law. There's people who come in and say, no, we want to use civil law. A lot of the Japanese that use Labuan decide to use the civil law system, and that's completely fine. It's absolutely flexible. Together, we're quite legally agnostic, as it were. That's what we say. And then currency agnostic as well. So you can use any currency you fancy, really. Singapore, this is a question I get asked a lot. And really, you know, I'm not a big believer in competitiveness. We feel that Labuan's grown because Singapore has grown. It's a very complementary role that we play vis-a-vis Singapore, and we're quite happy to play that. So in a lot of instances, as Singapore grows, there is a lot of trickle business that comes into Labuan, and collectively as a region, the pie just gets ever bigger for all of us.
Now you use this term midshore, and you've made clear what that is. One of the things that makes you midshore is that you are embedded inside this larger state, if you like. You have a separate regulator from Malaysia. You have this Labuan FSA, and how does that work with the regulators back in Malaysia as a whole, the Securities Commission, the central bank?
Yeah, so we run pari passu vis-a-vis the Ministry of Finance. So it's under statutory bodies, all the statutory bodies under the Ministry of Finance. Number one. Number two, there's a lot of coordination domestically with the SEC, the Central Bank of Malaysia, and the Labuan Financial Services Authority. So, for example, the Labuan representatives from the SEC and the Labuan, and the Central Bank of Malaysia sit on the board of Labuan FSA. There's a lot of coordination, I believe anyway, that, and you'll have to ask them personally, but I believe anyway that Labuan is seen as a test bed for a lot of stuff that will then, once it grows, is moved onto onshore Malaysia, and Islamic Finance is a classic example of that.
And how does the FSA work with the IBFC? You obviously have to strike a balance between being innovative, attracting business and so on, and the need for that business to be regulated in order to retain your reputation. Is that relationship very easygoing? Is it working at lots of different levels? Is it day to day?
So it's quite normal, you know, Dominic, for centers like ours, you know, Jersey, Guernsey, BVI, we all have them. And we act as the market development arm, fully funded by the regulator. Our role is, and it's fully funded by the regulator, but completely separate. So there's a separate board where we have industry body represented, and, you know, in order for it to be really industry friendly, in order for us to act as the app really between the regulator to the market and the market to the regulator. It's a very different mindset from onshore domestic jurisdictionally bound regulatory regimes. So yes, the relationship is quite seamless.
Right. Now, you mentioned that Labuan is something of a regulatory sandbox for Malaysia as a whole. One of the differences between Malaysia and Labuan is that Malaysia has exchange controls, Labuan does not. I don't know whether that's part of the experimentation going on, but how does that in day-to-day terms mean that Labuan works with the rest of the Malaysian economy? Does it mean that you have to do business in foreign currency, not in ringgit at all?
Well, yes. I mean, historically, that was the case. But then the OECD decided that that would be ring fencing. So we now allow ringgit to be traded in Labuan. Having said that, what the revenue in Malaysia, and it's important to note, and this is key, that the revenue of Malaysia is also the competent authority for all things fiscal in Labuan. So we have a unified fiscal approach and policy. That is really the check and balance as well. Mm-hmm. And what has happened is, while you are able to use ringgit in Labuan, there will be an internal withholding tax to ensure that there is no arbitrage between offshore midshore Labuan and onshore Malaysia.
Right. And in terms of the balance of business that you're doing, you did touch on this at the outset, but I don't know whether you can put numbers on it. What proportion of the business you're attracting to the IBFC is domestic Malaysian? What proportion is international?
Gosh, that's a tough question because we're almost 900 license holders in 30 years in, right? So we've got 900 licensed financial institutions in Labuan. It's a huge ecosystem. It grows, you know, it grows every day. It really, that ratio really depends on the business you're looking at. So banking, I would say maybe 60% domestic, 40% foreign. Insurance is almost 70% foreign, 30% domestic now. It used to be the other way around. So as our push towards regionalization and our attractiveness as a center, especially for Asia, enhances, the proportionality of Malaysian business goes down. Sorry, Dominic, are you there?
Yeah, I thought we'd lost you at some point there, I'm afraid.
Oh, okay.
So
we'll edit that out, so just keep going.
Okay.
Well, I just want to repeat that question, actually, Farah, just to make sure we catch it. It's an annoying question, but I think we should repeat it so we have a seamless link there. So I'll ask it again, okay? What proportion of the business that the IBFC is attracting is domestic, i.e. from within Malaysia, as opposed to international? And I suspect the answer to that question is quite complex, but can you put some numbers on it?
Yeah, it's definitely complex because we're 900 licensed entities in after our 30 years. So it really depends on the kind of vertical you're looking at, you know. So for example, in banking, I would say 60% is still domestic, 40% is foreign. In insurance, for example, almost 70% is now foreign and 30% is domestic. And when we started 30 years ago, the numbers were inversed. So really, as Labuan grows in recognition regionally, the pie grows and the level of Malaysian involvement by percentage reduces. And this is something that we encourage, obviously.
Now, one of the things that we're driving internationalization is digitization. We talk about the digital economy, we talk about growing volumes of digital e-commerce taking place across national borders. But if we look just at Malaysia as your domestic base or adjunct, how digital is the Malaysian economy, and does its level of digitization matter a lot to Labuan?
Yeah, so I think, with COVID, the level of digitalization has shot through the roof. That's for sure, domestically in Malaysia. Does it affect Labuan? Yes and no. No, because, obviously our marketplace is much larger than just Malaysia. Number two, if you were to trade with a Malaysian retailer, you would need a domestic license, not a Labuan license. So only qualified investors in Malaysia who are Malaysian citizens domiciled in Malaysia are able to use the Labuan offering. Having said that, what has happened is that a lot of the domestic players, digital players, are now moving out of Malaysia, going regional, and that's where Labuan comes in. So I'll give you an example of that. Policy Street is a fantastic example of that, in the sense that they started out giving out quick insurance cover, micro insurance cover for the Grab, the food delivery boys, the delivery boys. And what has happened through that is that they've grown so much that they're now looking at a regional footprint. Through their regional footprint, they were recently licensed in Labuan as a insurance company. And via that, they are able to now get into JV partnerships with domestic insurers in different markets in order to then distribute their lines. So yes, it is important, but the Labuan element is important vis-a-vis Malaysia only when Malaysian digital players get to the size where they're looking out of Malaysia.
Well, I asked that question partly because Labuan's obviously identified digital finance, very broadly conceived, as a huge opportunity. And I noticed in your materials, you do tend to use the term digital rather than fintech. What is that telling us?
Well, to be honest with you, our digital journey has been very exciting. We were brought into it kicking and screaming in 2017, thinking we got enough verticals to worry about. What is this digital space? And then very quickly we realized that this is the way forward, and that we need to try and understand it a little bit better. So we started out calling everything fintech. And then we realized that fintech is just a small sliver of what digitalization is all about. So the idea of using the word digital as opposed to fintech just denotes the sense of a holistic approach towards all things digital, really. And that's where our uniqueness in this space lies, because the regulator has taken a stance where the ethos is that everything in Labuan can be digitalized. So you've got, 6 acts that allow for all the license holders to be based in Labuan, that allows for their licenses. And all these licenses can be a digital version of that license. And I'd like to stress why that's possible. And it's possible because, number one, obviously we have a very forward-looking regulator, but more importantly, because we're a wholesale financial center, we're able to allow for experimentation, live experimentation without a sandbox. And what happens is that the regulator has a very keen interest in the business plan of all the license holders coming in. So they come in and they say, explain to us how that digital wrap will look, because we believe the business, the function of the business remains the same. However, delivery and management of that business could be digitalized. And that is the element that we need to understand. Of course, the regulator is, in my mind, extremely forward thinking in this, number one. Number two, making sure that is supervised and enforced well is a challenge they're willing to take up.
Could I ask you about that point you've just made about sandboxes? It's interesting that you have, in a lot of financial centres, including London, in fact, like to put forward these regulatory sandboxes. Come and play in here, and we'll see if we like your business enough to give it a full license. But you've clearly chosen this different path, which is comply with these existing regulations. Are you finding that's attractive to dare I use this term, the fintechs? Actually, that you just comply with what the rules are and you don't have to go through this playpen stage?
Yes, but what has happened is that we've also got additional requirements for them. So it's not necessarily a free ride. We've got additional requirements. So for example, a very basic example is a fit and proper for directors also include some kind of digital experience, right? And then the business case, the eKYC requirements, the client segregation, all that, the onboarding, the digital sign-off, it's not as simple as just show me how it's going to work, but, at every single level. Sorry?
Those are on top of the existing regulations.
Yes.
Right. Okay.
Yes. So we do, we allow for innovation. We believe in proportionality in regulation. We believe in innovation, obviously. But having said that, there has to be very clear check and balances to ensure that this just doesn't go all wrong, because it's very difficult to regulate something that we don't all completely understand, right? And that it moves so quickly. And I think that's the other thing that the regulator is keen on ensuring, is that they understand the technology behind it as well.
Licenses, you've mentioned them more than once. Can you explain to us a little bit more about the type of licenses that are available? I've come across the money broker one and the credit token license, but there are probably other types of licenses as well. What are the broad types of license, and what do they entitle people to do?
So you have your money broking license, which basically allows for a crypto exchange, right? Because if you take the notion that crypto is money as a token of trust, really, which is what money is, an exchange for crypto really is an exchange for money. And so money exchange, the money broking license, is the crypto license. The tokenization, the utility tokenization, is that tokenization license. And then you have your payment gateway license. You also have a securities dealer's license, which will allow for dealing in securities on the premise that a digital security is a security nonetheless, right? And then you have your fund management license, your box standard licenses that you have everywhere. Those are also able to be digitalized based on that business plan. On top of that, we also have what we call a Super 134 license. This is the license that has been given to the Labuan Financial Exchange, as well as Fusang Exchange. These are primary and secondary listing venues. The Labuan Financial Exchange is actually owned by the National Stock Exchange. And what they do there is that they are governance, basically they act as a governance listing for a lot of sukuks. I know for a fact that they're looking at digitalizing it in one way, shape or form. On top of that, we have the Fusang Exchange. Fusang Exchange is the first exchange after the LFX exchange, the Labuan Financial Exchange, that we've granted the super license to. And what they are doing is that they're tokenizing and issuing a lot of digital asset-backed securities on this exchange.
Talking of that, talking of the LFX, which, as you say, is owned by the Bursa Malaysia. What is the value of the LFX to the Bursa Malaysia? Is it a kind of experimentation arm, like a lot of what goes on in Labuan? Point one. Point two, I've noticed that Bursa Malaysia and LFX have been experimenting with tokenized bonds, and I wonder where that experiment has got to. There's a lot of international interest in that.
I wouldn't dare speak on behalf of Omar, who is the CEO of Bursa Malaysia, but from my understanding, LFX is really a governance listing exchange where all the sukuks are listed in order to ensure governance of that particular issuance, right? I think what they're trying to do with that is really create and as a governance listing venue, there isn't a secondary value to it. So what they're looking to do, I believe, again, is they are looking to tokenize these bonds to create a secondary market. So it's more digestible. I mean, really, it's the democratization of the bond market via digitalization, if you look at it. And I know for a fact that Fusang is also looking at something very, very similar.
You mentioned the Fusang exchange, which has clearly set out its aim to attract security token issuers, and it was about to launch a tokenized bond itself with the China Construction Bank a year or so ago. I don't know what happened to that, but it seemed to be postponed. What is your view as IBFC of the potential for the centre of tokenization of securities and asset-backed tokens as well? Do you see these as big axes of growth for you?
Yeah, I mean, I think it was very unfortunate what happened because CCB, China Construction Bank, is a huge bank based in Labuan as well. So the bank, we actually gave our first digital banking license to China Construction Bank more than a couple of years ago now. And they actually run CCB's balance sheet out of Beijing through Labuan. The idea was to really allow for financing of the Belt and Road via Labuan. Right, and then they obviously met Fusang and they thought, okay, let's do this together. And I think what has happened with that initiative is that it was actually the first victim of the PBOC's clampdown on digitalization. And now with everything that's happening, it seems quite clear that this was always in the works. Now, with regards to tokenization of bonds, absolutely. I mean, I think there is a lot of value to be had in democratization of bonds via tokenization and digitalization. I mean, the beauty of digital, all things digital, is that you're able to cut and slice and dice it based on more bite-sized sizes, really, for it to be more bite-sized, number one. Number two, the digitalization also allows for a very clear audit trail via the DLT. So it allows for transparency in what some may say historically been a bit of an opaque market, the book running and the book building and the issuance and all that. So really, I think that's quite interesting. I'm also, I believe the environment is so key for us. And I think, the ability for us to also issue some kind of asset-based, tokenized asset-based on the carbon market would be quite interesting because the carbon contracts now are so large. And with the growth now and the size of the price of these carbon contracts, it's a matter of time before you're looking at a digitalized carbon market.
I'd like to ask you a slightly unfair question about just staying with those bonds on blockchain network experiments. They did see a continuing role for central securities depositories, CSDs. Whereas part of the sales pitch of the enthusiasts for issuing bonds onto blockchains is actually you don't need the CSD anymore. You simply issue the bonds directly into the digital wallets of the investors, right. And the blockchain ledger itself, ensures the register's up to date and so on. Was this a regulatory thought? Why was the CSD retained in the Malaysian experiments?
Yeah, I mean, if you look at the 134 license, which is what Fusang and LFX have, there is no requirement that is actually imposed on them. This requirement is a requirement from self, right? Because they run their own exchange. It is a full-fledged primary and secondary exchange. So their listing rules will be determined by them. I suspect the CSD requirement, the central depository requirement, would be something that Bursa is probably more comfortable with because they have a CSD system in place. Yeah. And, it begs, I know it's your cheeky question, but the cheeky answer to that is that, this perennial question as to whether legacy finance and digital finance, whether the twain shall ever meet, because I think it's an ethos issue. I know for a fact that from my dealings with Fusang, they are not going to have a CSD requirement at all. It's going to go straight into the wallet because they are a purely digital. They don't carry with them legacy baggage necessarily. So yeah, we'll see how that all pans out in the longer run.
So anybody who wants to set up a bonds on blockchain network in Labuan wouldn't, under your rules, have to have a CSD. It was a
no, of course not.
Okay. Now, Malaysian law has tended to encourage crowdfunding, which is the thing which gave birth first to ICOs, and that has now morphed into decentralized finance or DeFi. Have you as the IBFC formulated an attitude? I don't know, when ICOs were going on back in 2017, there was this boom going on, whether you formed an attitude then which has persisted. How open are you now to DeFi businesses coming to the IBFC? Are you cautious about that, or are you open-minded about that, or?
I think there's a lot of understanding that needs to happen with regards to DeFi. I think, I've never really, well, yes, I've worked in a regulatory body before, but I've never been a regulatory, so I don't really understand, I should caveat that, I don't really understand the ins and outs of the regulatory mind, I should say. But I think the concept of DeFi in itself is something like Web 3.0, for example, right? Is something that the regulators need to get their heads around, because it's completely juxtaposed against what is normal, what is seen as normal in legacy finance. So as far as we are concerned, I guess we will look at each and every application. We don't necessarily at this point in time have a stance vis-a-vis DeFi as such. With regards to deregulated exchanges or DAO, I think there are quite a few initiatives going on using our foundation, our private foundation, as a DAO vehicle, really, because it kind of aggregates out control via the council. And it's very similar to what's happening in other IFCs. So the DAO is the foundation, the structure, which is a high net worth tool, high net worth ultra high net worth tool, planning tool has been used for DAOs, and I suspect that will happen in Labuan soon as well. But with regards to DeFi, we don't have a policy stance at the moment.
Cryptocurrency, you are open to. You've got this money broker license, which applies to cryptocurrency exchanges. Presumably, it's the same license for cryptocurrency brokers, right? And you've got cryptocurrency funds. So the regulator's okay with that. It's the type of business you have been attracting, would like to continue to attract. Is that right?
Yes. Yes. In fact, that's our single largest growing space as well, together with the investment banking licenses, digital investment banking licenses.
And is the interest driving those cryptocurrency service providers in Labuan coming from all over the region?
It is coming predominantly from Asia. We're seeing a lot of interest out of certain startups in Africa as well, and some in the Middle East. So for example, Facet, which is quite a large group in the Middle East, recently took out 6 licenses in Labuan in order to really grow, in order to be able to offer what they need to offer. So we believe in a stackable toolbox. So what you do is you just layer one license on top of the other to get your end product. So that as part of Malaysia, if we were to come up with a new act to just look at digitalization, that would have to go through the Malaysian Parliament. Mm-hmm. So what we encourage users to do is to stack those licenses in order to achieve operationally what they would need.
Mm-hmm. Now, as you say, as part of Malaysia, the central bank in Malaysia, Bank Negara, is exploring a central bank digital currency, a CBDC, and it's involved in experiments for the use of CBDCs for cross-border payments as well. Do you think that presents an opportunity for the IBFC, for Labuan?
I think CBDCs are quite unique in the sense that whilst the space of digitalization is quite borderless, and I think this is where there's a natural synergy between IFCs and digitalization, because both do not respect jurisdictional boundaries, right? Having said that, CBDCs are very much domestic driven. So, I believe it would encourage digitalization, obviously, especially walleting among the general population. Having said that, whether it's going to have a direct impact into Labuan, I doubt it, because this is going to be something that's quite retail and not wholesale.
Now, we've talked a lot about fintechs, about digital businesses, about cryptocurrency and so on, but the IBFC also hosts plenty of conventional, traditional financial businesses, particularly insurance. Now, you mentioned this earlier, how you've turned it around from domestic to international, in fact, the type of business you're attracting. What has turned that around? What's the attraction been to those international insurers?
I think originally, they were using Labuan as the first right of refusal for all Malaysian business. Having said that, they started to understand that the Labuan insurance legal regime is extremely expansive, and there is a lot of different licenses to be used in order to facilitate regional business. All Labuan insurance license holders are also allowed to have presence in Kuala Lumpur. And as a center, Malaysia is extremely cost efficient. So what you'll find is a lot of insurers, reinsurers, brokers use Labuan and take advantage of being able to be in Kuala Lumpur as their regional base. So really, it is almost a virtuous cycle, a virtuous combination, I should say, of Malaysia being the center of Asia, the low-cost environment, the multilingual talent, the tax efficiency in Labuan, and the availability of all these licenses. So, we've been very lucky in this space.
You mentioned an insurtech that you attracted earlier as well. Are you attracting a lot of insurtechs, these sort of new startup insurers to Labuan?
Of late, more so. Originally, our first insurtech was in 2017. It was an entity called Arsenal, who have renamed themselves the Igloo. They're now in Series A, I believe. So that's great. We've got quite a few others as well. We work very closely with the Singapore Insurtech Association, the Singapore Blockchain Association. We know that there is a lot more insurtechs in Singapore as compared to Malaysia onshore. So our focus is there. But yes, we definitely are looking at expanding our presence in legacy insurance into the insurtech space, for sure.
Now, funds are another so-called traditional business which are a focus for you. What sort of funds are you attracting, and what are the incentives for them to come to the IBFC?
Again, it's an issue of substance. So I think, funds is quite interesting in the sense that, you take a Cayman fund, you take a Singapore fund or Hong Kong fund, Labuan fund, they're exactly the same. So these are not public funds, obviously. These are private funds, PE funds, any kind of funds that you'd want to use. The requirements are absolutely the same, articles exactly the same. We have then the partnership structure to assist with that. We also have the protected cell company for funds. So that's an umbrella fund vehicle where each cell is bankruptcy remote from each other. So we have a lot of structures that are available in Labuan. Now, the attraction is really the fact that our substance requirements for funds very clear. As I said earlier, they're all gazetted. So there's no guessing game with regards to, is my substance sufficient in order to enjoy this tax rate? Again, I go back to the core point of, as we're talking about legacy licenses and legacy issuance, I go back to the point of the fact that the tax environment globally has changed tremendously over the last 5 years. And now everyone needs to ensure that mind, matter, and management is at the jurisdiction where this tax is paid. Tax is no longer an issue of efficiency, it's also an issue of equity and fairness. Is it a fair amount of tax to pay? What is your substance contribution to where you're enjoying this tax at? And because of Malaysia's central location, our cost efficiency, the availability of all these structures, again, we have been a very fortunate recipient of interest.
I've been wondering how important the geographical location of Labuan is.
It's extremely important. I mean, when we did initial research, we realized that the word Labuan came from the word Labuhan, and in Malay that means port. We're home to Asia's deepest natural port, physically. That's why it's such a huge supply base for the oil and gas off the Borneo cliff, the Borneo seabed. So yeah, Labuan has been historically a port of call, and the growth of it is now in financial services as well.
And does that geography help to explain why the ASEAN Infrastructure Fund came to Labuan?
The Asian Infrastructure Fund is a fantastic fund. I mean, it's run by the ADB and it's committed by all the Asian states. And the idea is to let me see. It was set up in 2011. That's a long time ago now, a decade ago, where the word inclusion wasn't even, the buzz that it is today. And really the idea was to enhance inclusion, if I were to retrofit it, by enhancing infrastructure projects within ASEAN. And was our location part of it? No, actually what happened was at that point in time, the ASEAN ministers, Malaysia was hosting the ASEAN ministers, and we said, no, let's use Labuan. Labuan is a neutral environment. So all the different countries could then endow into this fund in their own currency. Let's not forget the cost and risk of foreign exchange. Using an intermediation center like Labuan will allow you to mitigate that cost. So the first project that the AIF actually rolled out was to create a little bridge, well, not so little, but a bridge in Myanmar, I should say, excuse me, in Myanmar, that joined two little villages that, where they had family that haven't seen each other for years. And, I know my face lights up when I talk about it, because it's the idea of financial services being able to really bring people together and seeing it hit, rubber hit the road. It's fantastic. It gives me goosebumps till now. So yeah, we're very proud of the AIF and the work that we've, how we've assisted the AIF in ensuring that, there's more inclusion within ASEAN, for sure.
Now, there's a third stream of traditional business you're looking to attract, which is the wealth management, private banking. And like insurance, like funds, it has this digital component to it. You've attracted the Fintech bank, for example. So how important as let's call it wealth management, how important does that become as a growth area for you in recent years?
Well, when we look at wealth management, there are different tiers, obviously. So there's mass wealth management, there's affluent wealth management, there's ultra high net worth wealth management. And our focus is very much into ultra high net worth wealth management. So, we have purpose trust, special trust, very much like the Channel Islands do. We have a private client foundation. So all that is key. Obviously, we have our protected cell company that a lot of users are starting to explore using for family office requirements. The growth in family offices in Asia has been tremendous. So we have all the structures, all the solutions that's required, and we are increasing. There's an increase in interest. Obviously, the digitalization aspect of it is something that really depends on the families using these structures, because it could be that there will be an element of investment into digitalization, for example. The structure itself is a legal structure that doesn't call in the issue of digitalization is not part of it, because it's a legal document. It's a legal structure. So the foundation, for example, the setting up of a foundation doesn't need a digital element. However, the running of a foundation or the investment mandate of that foundation, the private client foundation, might, and we allow for that, obviously.
Mm-hmm. Now, Malaysia is an Islamic country. How important is Islamic finance to the IBFC, and how do you go about attracting it?
Islamic finance is a bedrock for what we do. I mean, we are home to the world's first sukuk. We were the sandbox, as it were, for Malaysia's leadership in Islamic finance. A lot of what happened originally in Malaysia happened in Labuan first, including, Islamic windows within commercial banks and how that's run. So yes, Islamic is key for us in the space of digitalization. Islamic is something that we are looking to really, so you'll hear a lot more from us next year vis-a-vis Islamic finance and digitalization. In fact, the regulator is meant to issue a strategic blueprint sometime next year. And one of the key thrusts of that is Islamic digitalization of financial services.
Can I ask you about your attitude towards what we at Future of Finance call open data, a concept by which we mean consumers own their personal data. They make that available to organizations they want to buy things from. Companies may even have to pay those consumers for access to that data. And we see this as a component of a spectrum of uses of data, which eventually reaches digital identity. So everybody has a personal digital identity, which they can use, and you can start to tie, for example, digital assets to those digital identities. So instead of using private keys, that asset belongs to you because it's tied to your digital identity. Are these things you're thinking about at the IBFC, open data and digital identities?
Hard one. That's the hardest question thus far, actually, Dominic. In the sense that I think we are very much driven by the needs of our license holders. For as long as we can ensure that there is a check and balance with regards to regulation, with regards to requirement on beneficial ownership. And I think the issue of beneficial ownership is something that, digital identity somehow needs to come together. Yes, all well and great that, instead of a wallet, everything's tied to your personal identity, and you have, you allow for your identity to be, I guess, quote unquote, used in that way. Having said that, there are current rules in legacy finance that require beneficial ownership registry to be held by intermediaries and the regulator. So it's a complex question. If a potential license holder were to come to us and say, look, we're going to issue a fund, our fund is going to be issued, blah, 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 and we're going to allow for digital identities, we're going to say, yes, but please get a sign off by those people. How are you going to use that? The beauty of wholesale financial intermediation is that there isn't an undoing and nitpicking of the details. And that allows for that innovation. So I guess if I were to hazard a guess, I would say that yes, this would be something that would probably begin in international financial centers, but there would have to be some kind of a coming together with regards to international rules on beneficial ownership and the parameters of reporting of that beneficial ownership vis-a-vis multilateral organizations. Because again, right, the base, as it were, is the issue of anti-money laundering and terrorism financing. And this is, if you talk to regulatory guys, their biggest problem is not the digitalization. Their problem is making sure that digitalization does not dilute the AML CFT requirements. So you're taking that question one step further, right, by asking about digital identities. And, my answer is, I don't know. Having said that, I can foresee that the biggest issue would be, right, streamlining that with beneficial ownership requirements that then gets crossed across borders, yeah, to ensure that money laundering is nipped in its bud.
So you have to work across national borders, not just to attract international business, but actually to make Labuan an attractive center. Does it ever make, and indeed for regulation, does it ever make sense for you to work hand in glove in conjunction with other international financial centers as you're trying to develop policies that will be attractive to international businesses to come to Labuan? Does it ever make sense to work with the other centers, or are you so competitive with each other that it never makes sense?
So there are two parts to the question. I think the regulators have a long history of working together. So we just had a launch to commemorate. We had an event yesterday to commemorate 25 years of the regulator, and we had the head of the regulator from Guernsey, Jersey, long-standing relationships because they need to exchange information with each other. We've had numerous potential license holders that have not received their license or full approval based on information that we've received from other regulators. This is how we keep everyone at bay, as it were, So yes, exchange of information between regulators is important. Now, with regards to jurisdictions, we feel that it's important as well. And let me tell you why. Because fortunately or unfortunately, in this era of globalization, regionalization is getting more and more important. And we, as financial centers, when I speak to my peers, everyone agrees that location is key. And that's one of the reasons we signed up in an MOU with Qatar. I met yourself in Turkey, actually, like a couple of years ago, and we said, wouldn't it be great if we could do this for our license holders? The idea is really, if two jurisdictions get together and we create an environment where the license holders are able to cross business, it grows. As opposed to, and both of us grow, right? As opposed to just having what you have domestically or regionally, you're able to then work together in a safe environment, knowing that the authorities are talking to each other, and not just the regulatory authorities, but also the market development authorities. So yes, I'm definitely one for all boats, all boats, the tide raises all boats, for sure. I don't think there's competition among offshore centers is fierce. I will not kid you. But I think there's definitely room for partnerships, especially partners that are not in your geography and not in your specific vertical of interest, because there's a lot to be said about cross-selling.
Now, in engaging in that fierce international competition with other centers, what are the ways you go about that? I don't mean what things you emphasize, why come to Labuan. I mean, technically, how do you sell the IBFC abroad? What methods are you actually using?
Well, yes, we say come to Labuan, it's a great place, number one. But actually, what makes an IFC? I think we go back to that core question of what makes an IFC, and what makes an IFC is its laws, its guidance, its practice notes. So for us, the discipline is ensuring that our rules, our regulations are up to date. We compete with regards to legislation and guidance. The responsiveness of the regulator, the cost efficiency, obviously, but fundamentally, right, it is the legislation and the provision of all the unique structures and solutions that are come into being by this legislation.
One last question for you. You could look back on 30 years. It's been a considerable series of achievements. What about looking, I don't know whether you can look 30 years ahead, that's probably too much, but if you look 10 years ahead, what would you like the IBFC to look like then?
I would personally, I can only answer personally, obviously. I wish I had a crystal ball, but I think that I would like Labuan, personally, I would like Labuan to be extremely sensitive towards inclusion within Asia. And I think there's a lot to be said about the role of wholesale financial intermediation towards enhancing inclusion. And yes, they're crazy rich Asians, but having said that, there are so many destitute Asians. And, I think the distance between the have and the have-nots in Asia is bar none globally. If you look at Africa, I think the distance is less so. But in Asia, especially in countries like Indonesia, around the Mekong River, Philippines, the difference is just, the have and the have-nots, the distance is too far. And I think there's a lot to be said in the usage of structures, the unique structures that are available in centers like ours in order to enhance inclusion. And I'll give you an example, the Protected Cell Company. We know for a fact there's a Protected Cell Company that has been set up in order to provide microinsurance for seaweed farmers in Indonesia, right? And these are the things that we like to encourage and we like to see, because it's not, the way, and I've been called this socialist capitalist quite a few times now, but I'd like to see a situation where international financial centers are able to facilitate this level, enhance at least this level of inclusion globally. So that's what I'd like for Labuan anyway.
Yeah. Well, I was going to say, I thought it was my last question, but actually what you're saying is deeply counterintuitive. People wouldn't normally think of international financial centers as contributing to financial inclusion, but you've mentioned it more than once in this conversation. I think you published an entire paper on it as well.
Yeah, no, I mean, look, let's think outside the box, right? The largest cab company owns no cabs, and the largest hotel company owns no rooms. So is it so difficult to imagine a situation where inclusion is a mandate for all wholesale financial services centers? I mean, at the end of the day, right, if there are more people who are able to afford more globally, the business of financial intermediation just grows. I don't think we are at that stage where we should be now worried about the size of the pie that we have. I think we need to grow the pie. And unless we grow the pie, we're all just going to get crumbs. So what's the point?
Mm-hmm. That's a lovely note to end on. Farah Jaafar, thank you very much indeed for taking time to talk to us.